I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick.
Always a pleasure, Jim.
The bond market. The Fed kept saying inflation, inflation, inflation. That never happened, did it?
Boy, are they in trouble. You know, we've had a good deflationist trade for the last 36 years, and I don't think it's ended, not by a long shot. And, you know, the Fed has used as a rationale for this tightening, which they didn't do, by the way. The markets did it for them. The markets having gotten it completely wrong. But, you know, we're going to have to back out of this whole inflation idea because it just ain't happening.
Why hasn't their prediction come true? Are they just that incompetent?
Because the world is being asphyxiated by debt. You know, you can only have so much inflation with literally $1 quintillion worth of debt. So, you know, you get some relief floating the markets higher on all this monetization. But it can only take you so far. You know, you get inflation in certain classes of assets, and you even get a little consumer inflation. But when you stretch the truth to suggest that the labor market's so tight that you're going to have wage push inflation, that's when the Fed's argument starts smelling like the manure it really is.
Well, where have these massive pay raises been?
Right, exactly. You know, we've had real wages stagnant for so long that I tend to refer to anything that people see as inflation as deflationary. The reason being that if real income is stagnant, but certain costs of necessities are rising, let's say healthcare for one and food, the money that you spend on those necessities has to come from somewhere else. And in large part, it's come from additional borrowing. People are borrowing still against their homes, borrowing against their credit cards, borrowing against everything else. And the sums are too large already to bring them down in any meaningful way.
Retail sales are down. Is that the price being paid for having to pay more for food and lodging?
For certain. And I think that also, even though Amazon has picked up the lion's share of what the brick-and-mortar vendors have lost, there's been a net loss because people, you know, when you get out and shop, you tend to buy more than you really came to buy. So I think that impulse buying part of the consumer economy has diminished somewhat.
With that reduced buying power, people really are showing that I don't have money to go out and buy new shoes. I'm going to use the old ones if I can. What does this say about our future retail business?
Well, they're hanging in there. The biggest piece of it, though, is not even retail per se. It's the auto market. And the same factors that are already in the pipeline to collapse the housing market are there for the auto market as well. Because, you know, a good piece of the housing market has flourished mainly because credit conditions have allowed people to buy a lot more house than they can afford. And that's exactly what car leases do. They allow people to drive more car than they can afford. And when you get a push up in interest rates, it impacts the leasing market so that leases become even more expensive. They were not economical to begin with unless you operate as a business, you know, but people did leases anyway simply because it allowed them to get the car of their dreams without much of a down payment.
We'll have more with Rick Ackerman right after the break.
Avon Resources Limited is a gold exploration company. with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, what caused the housing bubble, I'm sure, is everybody went for the old dream house where you just plan to pay the interest because legally that's all you had to do and not attack the capital. That was disastrous. But a house is at least different than a car in that you expect the asset to at least hold its value. Cars, of course, depreciate the second you turn the key.
You know, Jim, I watched these shows, the Flip or Flop show and some of the, searching for homes in the Caribbean and things like that. But looking at something everybody can see right now, Southern California or even California well north of L.A., you have a housing market where little ranchers are now up in the, $1 million or plus category. And it's not rich people who live in those homes. They're basically working stiffs, and the only reason someone can come into a neighborhood with dumpy little Eichlers or 1,100 square foot ranchers and pay $800,000 for them is because, there are two things. One, they're probably trading out or up from another home that has a hugely inflated value, and but also they're able to borrow the money. So even in the wake of the 2007-8 collapse, the housing market, there's been enough easy money to keep prices up, but of course it's a wily coyote off the edge of the cliff scene because we've got this perfect storm in housing that comes from a tightened supply pushing prices up at the same time that you've had a nearly 90 basis point upward skew in the 30-year rate. So to me, that's a perfect storm in housing. And, even if you look further out the curve at the demographic, who are all these baby boomers going to sell their homes to? The kids that are already living in them till they're 35. So the slackers and the millennials don't have the purchasing power to take the baby boomers out of their, $800,000 to $3 million homes. And, that does not bode well for 4, 5, 6 years out.
In Canada, of course, they love government interference in the market. Is it really necessary for government to do things like put in foreign buyer taxes, vacant home taxes, things like that? Or does the market solve itself because finally prices are just so high nobody buys?
Well, I tend to see government as the root of all significant problems. And of course, it's not a coincidence that our tax policy has made mortgage interest deductible so that housing becomes such a no-brainer for investment that's where all the investment that otherwise would have gone into productive capital has gone.
Well, in Canada, mortgage interest is not tax deductible. The exchange, they say, is you don't have to pay capital gains tax when you sell your primary residence.
Well, we don't have to pay capital gains taxes either up to a fairly significant home valuation. You sell your home here, and I can't remember what the tax-free amount is, but it's yet one more incentive to push all your money into your home, and I guess the stock market then takes care of itself because there we've got a different source of borrowing power that's keeping those assets high. So we've got a definite asset bubble that's going to hit not only the financial markets, but residential real estate and, of course, commercial real estate as well.
We'll have more with Rick Ackerman right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Rick Ackerman. Rick, I noticed Bank of America has had a decent first quarter profit, but Goldman Sachs missed their profit target. And the reason I'm commenting on that is Goldman Sachs has planted their people in so many government positions across the planet, and yet the very place that produced these people can't do the same thing that all the other banks are doing, and that's make money.
Well, the banks are having a problem because you have to realize that they are brick-and-mortar entities as well. You know, banks have done business through these big structures, and that's a real estate cost that they're going to have to bear. Also, these big bank buildings and branches are there because the banks have had employees that over time, and I'm not talking about the long term, but the relatively near term, the people working in those buildings are going to be phased out. So the banks have some huge carrying costs there, and that's a cost to be reckoned with. It's probably not even factored into the likes of Gold, Wells Fargo, and all the rest. So the banks, but on the financial side of what they do, it's just tough to make money. You know, the Fed tried to put a little bit of, to take some of the flatness out of the yield curve, but they don't really have enough room to move. They can't raise interest rates so high to put that curvature back in the yield curve that it's going to. When you start helping the banks that way, you kill all debtors and all other forms of lending, especially as we were talking about earlier, in cars and houses.
In Canada, there's a big trend towards online banking, and they encourage you by paying you more interest than the banks do. Is that a trend in the U.S.?
I'm sorry, I'm having a little trouble hearing you with that question. Could you repeat it?
In Canada, there's a trend now towards online banking. They charge you, or I should say they pay you more interest than the brick and mortar banks pay you. Is that a trend in the U.S.?
It's a trend everywhere. It's just part and parcel of a deflationary trend that's going on globally. You know, all companies that can decrease their operating costs by putting some of their services online are doing it. And of course, it has the effect of reducing their employment roles. Of course, that's a good effect where shareholders are concerned. But for the overall health of the economy, it will eventually be a good thing. But we're going through eventually right now, and it's a wrenching deflationary period that's got a lot of years and much deeper depths before it plays out.
One trend I've seen locally is that the branch of the bank that I go to has a lot of tellers because they do have a lot of face-to-face business, and it's mostly people from China. Well,
I guess traditions die hard, you know, and to the extent you've had a huge influx of people from Asia living on the West Coast, they like to do banking the old-fashioned way, and of course, none of the banks want to do it that way. If they could, they would eliminate all physical checking. They'd eliminate cash. They'd eliminate tellers, and for certain, that's coming. But let's say the Asian presence in places like Vancouver is going to slow it down a bit at the retail level.
However, I have seen old bank buildings turned into Subway sandwich shops.
Well, we've got so many buildings now that are going to have to be transformed into something that it boggles the mind to try to imagine how all of the big investors in mall real estate are going to, are going to come out. Well, certainly not intact. They're all kind of looking at each other, wondering who they can unload on, and it's going to be very creative thinking. We haven't seen the half of it. There are obviously a lot of open storefronts, big boxes that have closed, but when you factor in closures to come, mainly from Target, Macy's, Nordstrom's, Kohl's, and who knows, even Walmart, that's a lot of space to sell.
Well, one of the malls in the Vancouver area has been halfway converted into high-rise buildings.
Right, and some of the conversions I'm seeing in my area, in the Denver area, are going mall to residential. In some cases, they can keep some of the commercial space intact. It's still usable for, doctor's office, dentists, and things like that. But we've only got so many doctors and dentists to fill those spaces. But yes, a lot of the structures from folded up. In our case, there's a great indoors, a huge 2-story store that sells furnishings. That's been closed for about 5 or 6 years. We've had Sam's Club closed for almost the same time, and there's really nobody to pick up all that space. And
there's only so many fast food restaurants you can go to, I guess, at the same time.
Yeah, and that's getting overdone to death here. You see the developers never, too much of a bad thing is never enough for those guys. So each little strip mall that opens in my area, you see they're being occupied by what looks like the best bet right now. Most immediately, there's a 3 or 4 store cluster that is Verizon, I think Smashburger, the ubiquitous Starbucks. But, we're getting a little bit saturated on those, and the developers, they all sort of settle on the same, 15 or 20 retailers that they know can stay open for at least another few years that are doing some business. But we're in the process of saturating with all of those choices now.
Do you think people are getting sucked into the franchise business only to find out 2 or 3 years later there just aren't the customers anymore?
Yeah, and it's pretty seductive, if you had gotten a brochure about opening I guess Chipotle is all, I guess it's corporate owned, but you take some of the other like sub shops, Quiznos or Subway, the franchise opportunities can always be made to look attractive, but no sooner do you open your little Subway than you see that you've got a little too much competition, not just from the other sub shops, but from Subways too. So we're just so overbuilt on retail square footage per consumer. That's hugely true in Colorado, and I don't know, we've got a lot of migration here from California. So as you might expect, the developers have over-anticipated the migration, and they're preparing for Colorado to have the population density of California.
Well, Colorado is a beautiful place. So is BC, but you do reach a point again where people look at the house prices, and right here in Canada right now, Vancouver's had its housing bubble. Prices have come down. The government, of course, is taking credit by putting a foreign tax on buyers, but prices were coming down and sales were already down before the tax happened. It's just governments love to take credit for things they never did. Is that something that governments are tempted to do, stick their finger in when the dike has drained long before? Yeah,
the government's not going to be the first to perceive the problem and act on it. And yes, by the time they do get around to acting, probably the opposite action is warranted. So, you can't anticipate what all the shakeout is good, what the shakeout in Vancouver real estate is going to mean somewhere down the road, but you can bet that government will be implicated in whatever disaster it is.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from Colorado. You're listening to HowStreet.com radio. If you have any questions for us or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.